From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 19th, 2017. In a moment we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. But first I want to recap a couple of the trade suggestions made over the past few days. Starting here on the NZD USD, the New Zealand dollar, US dollar daily time frame, we can see that this currency pair clearly has been in a downtrend along the black trend line. Over the past couple of weeks, though, we've seen it in a little bit of a range down here, the blue box at the bottom of the chart between the yellow zone, 69.35, 69.10, and the green zone, 68.75, 68.55. So within that, we've been looking for opportunities to go short in the direction of the trend, which is selling resistance, the yellow zone. We've discussed also historical price action around this yellow zone as well. So we have taken the short towards the top of the yellow zone and the black trend line at the 69.25 level, currently sitting about 35, 36 pips of profit on the trade. Of course, we're targeting the green zone as our first take profit level. That is into the 68.75 level. We're only about 10 pips away from that now. And if it can break there, we'll look for further movement in the direction of the trend for the New Zealand dollar. Yesterday, we also suggested a short on the AUD USD Australian US dollar into a very similar situation, the black trend line, the bearish trend line. In this case, we've been studying the two blue circles, the pattern there, the rise, test of the black trend line and fall, rise, test of the black trend line, 1, 2, 3, 4, 5 days. Now we're challenging the green zone into that black trend line. Let me zoom in one time. Take a look at that. 1, 2, 3, 4, 5 days. Today, the 5th day, challenging underneath that green zone. So what we're looking for, and we traded yesterday, are opportunities to go short into the 74.45.60 level, the green shaded area. Risk, stop loss goes above the green zone in case it breaks this pattern, but we'll target the blue zone or lower in the direction of the longer term trend. I was taken out at break even on my trade from yesterday. We saw a decent amount of profit, came back up, took us out at break even on the trade. So I'm looking for a new opportunity anywhere between the current market price and 74.45 for a new opportunity to get into a short for the Australian dollar. Moving over to the USDCAD, what we're looking at today is some significant news about 30 minutes from the recording of this video. CPI data, retail sales out of Canada. The key point here, and I just want to mention this real quick, is that we're looking for something to happen around this pink zone. 3,600, 3,570 is the pink shaded area. If we get significantly positive news for Canada, we'll likely look for the breakdown of this pink zone and the turn lower, which has been basically the direction the market's been going in, but it's really a retracement of the black trend. And by the way, 382 of the black trend line over here is the bottom of the pink zone. So a break of the 382, a break of the pink zone, we're looking for this to go lower on positive data for Canada coming up in about 30 minutes from the recording of this video. We've also been studying oil. The rise of oil also gives way for further movement for the US CAD. So watch oil for the rise. This breaks the pink zone to go lower. Now, if oil suddenly goes down, we get negative news on CPI retail sales out of Canada, we could be looking for this to bounce off of here and turn back up in the direction of what was the previous trend for the US CAD. Okay, moving over to the USDCHF. We've been seeing this currency pair also sell off, US dollar selling off against the dollar franc over the past week or so. So what we want to do is look for an opportunity. If we're going to get an opportunity to trade in the direction of the current momentum and trend, we want to wait for the right opportunity. We don't just want to randomly sell it, because as soon as we randomly sell it, it could turn around and go back in the other direction, just like it did here at these two black circles. So we don't want to randomly sell it. We want to wait for a trade setup. We want to wait for a clear indication of when we want to trade it. Now, clearly, the next shaded area, the yellow zone, is quite a bit lower. That's 97.30, 97.15. The current market just challenging underneath 97.80. So we're looking for a little bit lower if it can break this green zone. Take a look. Previous 2 days, and let me zoom in one time, previous 2 days, holding congestion around the green zone, 97.80, 9800. What we're looking for is a clear breakout signal under here. I don't call this a breakout. By the way, this candle right here was red and bearish all the way down to the low here yesterday, and then it turned back around and got back up. So this right here should give you caution about assuming that the current candle is a breakout, because yesterday was red and bearish at one time and then it got back inside. So what do we need to see to give us confidence it's breaking and going to go lower and it's not another false move like what we saw yesterday? Well, it's been my opinion for quite a long time that if I'm looking for it to break out lower, I need an open and close, a singular candle body that opens and closes. Now you're probably saying it's Friday. This candle hasn't even closed. You're not going to get an open and close today here on the daily time frame. That's just the way it's going to go. We'd have to wait till next week, but we can take it down to the 4-hour time frame. And this is exactly what we discussed in the trade room yesterday, looking for the breakout of this green zone. And look at today, we have now opened underneath the green shaded area in 97.80 on the 4-hour time frame. So holding under the green zone, staying under the green zone, 4-hour, maybe even the next 4-hour candle, challenging it as resistance becomes our opportunity to go short. So we're looking for the breakout strategy. Often we're looking for the push underneath, like what we're seeing right now. Often then we look for a rally and retest just to give us better risk versus reward before the market goes back down to the next level. So watch for the open and close, maybe the retest back to 97.80, 9800, and then the next phase of the downtrend. The risk in this scenario, of course, is clear. The risk is that once it breaks underneath it, it breaks back above 9,800. So we know where our stop loss is. Our stop loss goes above the green zone. So that way, if it gets back above, we can limit that risk. So watch for the open and close. Hasn't closed yet, so we need to be patient. Wait for the retest. Sell it towards the yellow shaded area for the U.S. franc this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.